I'm Charlotte McLeod with investingnews.com, and here today with me is Will Rhind, CEO of Granite Shares. Thank you so much for being here. Always great to have you.
Good to see you, Charlotte. Thanks very much for having me.
Of course. Great to be kicking off the new year with you. And there's so much going on right now. We have gold and silver prices today either at or near all-time highs, depending on how it's looking at just this moment. And this is all going on as we have Jerome Powell, the Fed chair, facing a criminal investigation from the Trump administration. So it's a pretty tricky situation right now. I know Powell is saying this is all to do with the Fed's refusal to lower interest rates quickly enough. Trump is saying he doesn't have anything to do with this investigation. So can you break down what you're seeing here?
Well, I'd like to think, I suppose, that it is a bit of political coercion that's just sort of been ratcheted up to a new level based upon, as we all know, it's no secret that the administration wants interest rates lower. That they've been unhappy with the fact that Powell has not lowered rates to the level that they would like. Of course, his term ends in May officially, and the administration's interviewing new candidates to replace Jerome Powell. But I think this is just a sort of a ratcheting up of rhetoric around this whole issue of lowering rates and the Fed independence.
Yeah, I think ratcheting up is the right way to put it. And as we look forward at 2026 in terms of interest rates, is there anything we can say really with certainty right now? I guess it feels like we're going lower, but anything in addition to that you'd note?
Yeah, I think that's probably the right call in terms of we continue on this path lower. I think before we know who the new Fed chair is going to be, expectations, I think, in the market probably came down a little bit or have come down a little bit since that sort of barnstorming GDP number that we had at the end of last year. So I think any expectations around, for example, a cut here in January are now probably off the table. So I think there is going to be a cut, more cuts, but clearly we'll have to wait for the new Fed chair and the policy that he or she will implement.
And would you say your thoughts are similar on inflation, where we need to wait and see how this scenario plays out before we really know what's going to happen in 2026?
Yeah, I mean, I think if we're talking about official, CPI inflation, the numbers look good. However, I think that the full effects of the tariffs really have yet to come through the system. So while everything looks good, I think it's still too early to kind of plant the flag and claim victory. So everything looks okay now, but I think this is the real test in terms of this year will be a year plus, since a lot of these tariffs got implemented, and really will be past that point where, ultimately, whether it's distributors, whether it's product manufacturers, supply chain people, what they do about the pricing longer term as it sort of seems to solidify.
Great point about the tariffs. It feels like they've been left along the wayside a little bit with everything else that's going on. So was there anything on that note that you would pull out for investors that you're keeping an eye on?
I think is, again, just really the passing on of those costs and, how those costs are being absorbed. So far, to the extent that the consumer is absorbing the costs, the consumer seems to be absorbing whatever costs in the system okay. And that's really why you see inflation numbers in check. However, if that changes and either manufacturers choose to put up prices or distributors, manufacturers, etc., then we could see that picture changing a little bit this year.
And I also, if we put these things together, want to check in with you on your outlook for the U.S. economy this year. Again, I think there's a lot of things that we need to wait and see, but any initial thoughts there?
Look, the economy is in good shape. I think that's the main takeaway. You saw a really strong GDP number in terms of some of these problems that people talked about, when the president came in. Inflation was sort of much higher, some might say out of control. The deficit, again, in a bad situation. So these things have improved dramatically in a short period of time. You've got inflation, which again, we're not out of the woods yet, but I think inflation is certainly much better at the moment than it was clearly 12 months ago. Deficit is looking a lot better. Again, largely that's the impact of tariffs on the situation and us importing less and exporting more. But that picture is looking a lot better. Unemployment has ticked up a little bit, but is still, we're still talking about an economy that's largely at full employment. So there's a lot to be excited about. There's a lot to be happy about. I think the last thing I'll say is going back to the markets, of course, is that companies still continue to post strong earnings, and we've got earnings across the board that came in Q4 strong. And so while companies continue to report strength and raising earnings expectations, the market is going to go higher.
Well, that's a good path. I did also want to talk to you about what's going on in the stock market, because certainly I think in the precious metals sector, people are looking at it and thinking, well, this is overblown. We're due for a correction there. But, what are your thoughts given what you're saying there?
Yeah, I mean, in some respects, there's a number of things going on. But, with gold and precious metals more broadly, first and foremost, I'd start with it's a dollar story, probably is the main thing here. And, for the last 12 months or so, the dollar has been on a downward trajectory, which benefits hard assets, but particularly gold and other precious metals. I think couple that with the geopolitical tensions that we see around the world, which the stock market, has largely shrugged off. But I think that has been reflected more in the price of gold and price of precious metals more broadly, in terms of that elevated risk premium, whether it was Russia, Ukraine, or whether it's Israel, Gaza. Now you've got Venezuela, you've got Iran thrown into the mix. You've got the US being a bit more assertive from a militarily. And so from that perspective, you've got risk premiums increasing. And then, of course, add to that the latest news that we just talked about the criminal probe into Fed Chair Jerome Powell. And, you get that uncertainty that is reflected largely in the gold price, but other metals. So I think that, you're in the situation where on the one hand, you have a stock market and economy doing well, but the stock market seems to, so far, have shrugged off a lot of these risks that we're talking about are alive and well and manifest themselves in the gold market.
Yes, I think very much so. There are so many things alive and well under the surface that are probably going to come further to the fore as we move on. And on the note of geopolitical tensions, I did want to bring up Venezuela. I know this is only really happening last week. It already feels like it's a little bit in the distant past, just based on how quickly things are moving. But, there's been a lot of focus there on what that could mean for the oil market. But what about precious metals? What are you seeing as the potential impact there?
Yeah, I mean, I think it's twofold. So again, it creates additional uncertainty. So the one part that we all know is the removal of Maduro and his wife. The bit that everybody now doesn't know, or at least the questions are being asked as to, okay, well, what happens next? And, how does this play out? Not just over the next few weeks, a few months, but the next few years. And there's uncertainty around that at this point. So that creates uncertainty. Uncertainty is good for gold. I think the second part is that there's a question mark over, while everyone's talking about oil, Venezuela has a lot of natural resources, including base metals, including precious metals, and including rare earth metals, which of course are critical in terms of the technology race, particularly between US and China. And so that, I think, is a story that we'll learn more about going forward. But so far, it's really been dominated by the oil conversation.
Yeah, I think that's really interesting to talk about what it tells us about the growing importance of hard assets for countries around the world. And there's been at least a little bit of discussion about, all right, so the U.S. has done these actions in Venezuela. Does it mean it's going to make moves on different countries, for example, Greenland? Any thoughts you would share there?
Yeah, I mean, I think, again, it's just we're in a different sort of situation now where I think the administration knows very clearly what they want and what their sort of strategic priorities are. And, they're prepared to try and use whatever means they can to achieve those goals. Venezuela clearly being one of them, and of course, Greenland another. But I think this goes again back to, on the one hand, people will say that there are geopolitical benefits to getting adversaries like the Russians, the Chinese out of the Western Hemisphere, and of course that is true, and I'm sure that's a big part of it. But the other part is access to metals, access to minerals, access to energy, particularly as we are facing this huge shortage of power when it comes to AI, of basic materials when it comes to the electrification of everything in the economy, and critical rare earth metals and minerals to the most critical technologies, be they consumer technologies or for national defense. So I think it's all in the same mix.
Yeah, I agree. I definitely see what you're saying there. And we've covered a lot of ground in terms of what we should be keeping an eye on for gold in 2026. Is there anything else that you would add to the list, things that you are watching in terms of factors that could move the gold price?
Yeah, absolutely. I think that the one thing that we haven't touched on are, of course, the fundamental factors, and the fundamental factors have kind of been left by the wayside a little bit with all the other stuff going on, which, of course, is really, in my opinion, is the main reason that gold's gone to all-time highs. However, we can't ignore the fact that the fundamentals for gold and for other precious metals are incredibly strong. In other words, for the gold market in particular, central banks remain strong buyers, net buyers of gold. This is a trend that's been around for the last 10 years plus, but it increases as we go forward. And so you have a big bid on the gold price from central banks around the world, from investors, of course, around the world. This is something that's going on. Add that to silver, other metals like platinum, and you have markets that have been underinvested in for years, and therefore in a situation where the market is in deficit. In other words, there's more demand for the metal than there is supply. And these are not things that can be corrected very quickly. And so that the fundamental picture is driving not just gold, but silver and platinum as well.
Well, and let's make sure we talk about silver. And I think your answer also ties into what I was going to ask you. So silver, we typically hear gold moves first and then silver follows. So we've seen a massive breakout in silver since we last talked. Is it following gold higher, or is it moving also because of its own silver specific factors? How are you seeing it?
It's a bit of both. And, people will always look to, which one is the most, persuasive for their particular investment thesis. But in my mind, it was kind of inconceivable that you could have gold at an all-time high, at least, 6-12 months ago, and the price of silver not react in the way that you would have perhaps thought, at least historically. So silver was always going to play that catch-up role to gold. And historically, in a market where gold prices are rising, then you would expect, all things being equal, silver prices to rise slightly faster because it's a more volatile metal. But that didn't happen until quite recently. And I think it's the confluence of factors whereby a lot of people perhaps thought that they'd missed out on gold after the silent rally that's happened in gold over the last couple of years. People started to look for the next metal to go, so to speak, and found silver. Silver just so happened to also have great fundamentals. It was a market in deficit. People started to buy silver. Price of silver is going up. And then I think the same thing is happening to platinum now, where platinum again have been stuck in a range for many years. Platinum used to trade at a premium to gold, which in today's money obviously would mean a platinum price per ounce of well over $4,000 an ounce. Almost double where platinum trades today after a very big, strong rally. So I think people looking at platinum as well and thinking, is that the next one?
People definitely are wondering about what's going to happen next for platinum after spending years in those range-bound levels. So do you see that as conceivable, as likely that platinum could go back to trading at that premium to gold at some point during this cycle?
Yeah, because we're in a world where this is a precious metals bull cycle. Uh, I don't know if I've seen a better cycle or a more sharp upswing for gold, silver, and other precious metals. Certainly in my career, you got to look back to probably the gold peak of 2011 for something similar. But back in those days, you had a significantly higher platinum price vis-a-vis gold. So I think people are looking at that today and saying that this is a precious metals bull market, and it's really anybody's guess as to how high this could go.
It really is. Those higher prices are getting more and more realistic as time goes on. And I know you're not so much of a price predicting type of person, but looking at gold and silver in 2026, do you have a range in mind? Probably a direction in mind would be up, but anything that you can say?
Yeah, I mean, I don't know. I mean, it's something that, could gold get to 5,000, 6,000? I mean, is anybody's guess. But I think, when I was thinking about the gold price, so towards the end of last year, I thought, gold was definitely going to hit 4,000 an ounce. And my sort of view was that would happen sometime this year. And obviously that happened before the end of last year. So I think we're just in a very unusual situation where gold is rallying hard along with other precious metals, and we'll have to see how far that can go. I mean, when we look back to other periods like in 1980, the price of gold moved, I think it was eightfold from sort of trough to peak in that time. And so clearly, when you look back on some of those other periods for gold and silver, particularly where they went to all-time highs, then we could be talking about a lot higher price than we are today.
Well, and maybe a better way to look at it, it does feel like we're in kind of an acceleration phase. I know not just you, there's many people I've spoken to, they give a price prediction and it comes way sooner than they had expected. So do you think that type of acceleration is set to continue?
Well, I think what people would say, myself included, is if you look at gold through the lens of different ratios, sometimes an interesting way to look at it. So if you look at gold-silver ratio, or if you look at something like the Dow-gold ratio, or gold against the MSCI World, or these other ratios, then I think it certainly shows you that gold has further to go against equities if you look at historical ratios. So just based upon a gold versus broad equity index, it would show you that gold has further to go. And either with some of the other metal ratios. And I think, again, going back to the situation that we're in a situation where there's global uncertainty, arguably the world order that people have been used to for the last sort of 50 years or whatever is in the process of being upended. Maybe that's a bit dramatic, but certainly for some people that's how they see it. And from that perspective, we're moving from a globalized world to somewhat of a deglobalized world or a more polarized world. That brings more risks, and that's part of the reason why at this period people are stocking up on assets such as gold.
Well, you mentioned people are stocking up. Definitely, we can see that. To what extent do you think gold, silver, even platinum are becoming more into the mainstream for investors?
I think this is a good question. There's sort of two parts to this. That on the one hand, I think gold has never been more in people's consciousness than it is today. And I think we have to thank the Bitcoin and crypto community for that, for really, shining a spotlight on gold perhaps in an ironic way, because I don't think that was ever their intention, but to shine a light on an asset that is independent from the traditional financial system, that's not subject to the traditional credit and counterparty risks, that can't be printed like paper money, that sits independently. All of these sort of aspects that we're told about Bitcoin and cryptocurrency, I think people realized again or re-realized that, hey, this is what people have been saying about gold for thousands of years. So that's sort of one thing that I can think of. And then the other thing I think is that, it's really just now that I'm starting to see more mainstream coverage of gold and the gold rally. I look back to previous gold peaks, whether it was 2011 or whether it was subsequently in periods such as 2020. But when gold went to all-time highs, it was almost as if the world was about to fall apart. You'd have on mainstream, shows, whether it was the front page of major newspapers, they would be talking about gold's in a bubble, gold's in a bubble, gold's in a bubble all the time. And this time, at least for the last couple of years, I haven't heard any of this. And it's really, I think, only recently that it started to sort of raise its head in the mainstream sort of publications, where I see some like proper discussion, coverage of what's going on in gold, what's going on in silver. So from that perspective, I think if you look on a sort of a bubble meter or something like that, then just anecdotally, I would say that we're still somewhat away from the mania that we've seen in previous cycles.
Very interesting perspective. So thank you for sharing that as well. And just as we're getting to the end here, any final thoughts that you would leave investors with as we're heading into the new year? It seems like it's going to be a pretty interesting one.
Look, I think there's a lot of reasons to be optimistic about 2026. Whenever there's geopolitical tensions, situations, these things that perhaps seem scary do create opportunities for investors, for those that are willing to take risks, those that are willing to think longer term. But it's also a case that markets are at or around all-time highs. It's difficult to find something that is quote unquote undervalued. And I think that's why people are looking to commodities for the first time in a long time. And perhaps that might not be gold per se, but are looking at things like platinum, looking at other commodities which people haven't thought of, or just the asset class more broadly in terms of commodities. So it's something that's getting a bit more conversation now. But as well, if people are worried about markets at highs and just looking to take a bit of more defensive stance, then we see a lot of that manifesting in gold as well at the moment.
Yeah, it looks like that is certainly a trend that will continue. So thank you so much for coming on today to go over gold, silver, platinum, the markets. This was great.
Thank you so much, Charlotte. Always a pleasure. Thank you for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Will Rhind with Granite Shares.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.